Good morning, and thanks so much for tuning in to Stocks to Watch on BloombergQuint. I'm Mathew. We've got three interesting stocks to discuss at the start of what could be quite a volatile session in India's markets. But first, let me introduce you to my guest, Avinash Gorakshakar of Profit Mart Securities. Thank you so much for joining me today. Good morning to you. And the first counter I want to talk to you about is Siemens. On the back of its earnings, it's reported its numbers for Q4. Its revenue is down about 9% for the quarter on a year-on-year basis at just about 3,550 crore rupees. Net profit is coming 1.1% lower at 330 crore rupees, and margins are quite significantly improved on a year-on-year basis at 12.9%. I read a note, Avinash, that talked about the fact that there was healthy operational cash flow at 95% of PAT, and that's being seen as a positive for the counter in this quarter. How do you rate the numbers, and how do you rate the counter?
Good morning, Alex. I think numbers which have come out for the fourth quarter for Siemens, Alex, have been much better than what the street expected. In fact, you're right that not only the operating cash flow has improved, but overall, the EBITDA margins have improved because the company has adopted significant cost reduction measures. And I think clearly, as far as the company's capital structure goes, the company is sitting pretty solid, considering the fact that it hardly has any borrowings on the balance sheet, has got a reasonably large amount of cash on the books, and most importantly, I think the order book is going to get more further traction in the coming quarters. Most importantly, our sense is that the company has given a reasonably good dividend payout this time. It's announced a dividend of 7 rupees per share, and I think the markets would definitely look at this kind of performance with a positive stance, considering the fact that this was a very challenging period for the company. Our sense is that hopefully once the economy revives and the government business gains traction, you could see a lot of performance on the stock. Our sense is that this could possibly remain a little static or maybe a range bound as far as the near term is concerned, but longer term, hopefully once normalcy resumes, FY22 would be a much better year, considering that order book inflow as well as order execution would be the key monitorables going forward. So net numbers are definitely much better than the street expectations in terms of the cash flows and in terms of the profit. And I would believe that the management is pretty hopeful that.
Okay, Avinash, I believe we lost you just for a short while there, but could you give us your recommendation on the stock? Would you say that it's a good stock to hold in your portfolio, and should you buy it at this level?
I think, Alex, as far as valuations are concerned, it continues to trade at fair to expensive valuation. So I think somebody who's holding on the stock can definitely hold on. I would prefer that we get a reasonable kind of correction in the stock to actually accumulate the stock on declines. So yes, it's a accumulate on decline kind of stock, and definitely I think looking at the near term and the longer term kind of investment horizon, this could be a stock in your portfolio. But I think clearly one has to give a reasonable time frame over the next say 12 to 15 months. So definitely a buy on decline for Siemens.
Okay, all right. That's the cue on Siemens. Let's go to our second stock, which is an interesting one. I was looking at NSE delivery data, and this one threw up quite an interesting name. That's La-Opala. And when we used to talk about this stock a while back, it was always with a lot of interest from the retail side. This stock has gained about 7.7% in trade yesterday and saw delivery of 29%, Avinash. So that's quite the delivery for a stock that does not have very high trading volumes as compared to some of its peers, maybe. What do you reckon that indicates for this counter, and how do you rate it?
So I think, Alex, as far as La-Opala is concerned, they are market leaders in the organized tableware segment, and I think not only do they enjoy very strong operating margins, but I think the brand pull for this product is excellent. In fact, with the GST coming in, a lot of unorganized market share has actually been taken away by the company, and the market expects that October and November are going to be pretty solid months, considering the fact that the first quarter was a dry quarter for them, and normalcy in fact started resuming only in the second quarter. The good part is that sequentially numbers have improved significantly, and the company has got a large cash kitty on the books, has got a better survival instinct as compared to the other unorganized players. And we believe that the real improvement for the company could happen in FY22 when hopefully normalcy assumes. and there have been many large institutional investors also in this stock. So overall, looking at the B2C business and the operating, uh, margin structure, I would suggest that this stock definitely could be a good kind of value pick over the longer term, say over the next 12 to 18 months. But definitely, some amount of buying seems to have happened
I think
yesterday,
we've
which is indicative of the delivery volume. So I think net net one should hold on, look for a reasonably good correction to enter the stock, and which I think would deliver good numbers, in the next say 12 to 15 months.
All right, that's an interesting call on La-Opala, which brings me to the last counter. And Avinash, as a pack, the auto pack and by extension the auto ancillary pack has been in focus these last couple of weeks. A couple of days in those 14 days where you saw the Nifty rise to levels of 13,000, you saw the auto pack outperforming. But Varroc Engineering is the stock that we picked today because it has gained about 15.5% over the past week, and it is trading higher at this level than all of its simple moving averages. What do you make of Varroc, and where does it stand for you in the pecking order of auto ancillary companies?
I think, Alex, as far as Varroc is concerned, I think one noticeable development for Varroc was that in the quarter two, the company bounced back pretty sharply in terms of both top line as well as operating profitability. In fact, top line was up by almost 8% on a consolidated basis, while EBITDA was up by almost 12%. But the key number to watch out for in the second quarter was that the company has generated a reasonably large free cash flow of almost 400 crores, which has come from working capital cost savings and other cost saving measures. So I think after a bad performance last year, the business seems to be picking up, especially the India business and the European and the US business. The company has a multi-diversified customer base across three subcontinents, and I would believe that over the next say 3 to 6 months, as recovery happens, this company should definitely do well. Our sense is that the India domestic business would obviously hinge on how the two-wheeler business performs because they've got a large exposure on Bajaj Auto. But overall, in the lighting business, especially the Europe business, we could see a little amount of headwinds, considering that the COVID cases in Europe have increased. But net, I think at these levels, if one were to invest for the next say 12 to 18 months, it remains a fairly attractive investment option because the stock has corrected significantly from its highs, and more importantly, it's a thriving business which should obviously do better from FY22 onwards. So I think at current levels, one can definitely buy in a reasonable amount of exposure here, considering that the risk reward over the next 12 18 months looks pretty good.
All right, so two buy on decline recommendations and one buy recommendation for you guys to watch out for and trade today. Avinash, thank you so much for joining me and for sharing your views this morning. And to you,
Thank
dear
you.
viewers, thank you so much for tuning in. As always, remember there's a lot more to watch and read on the website bloombergquint.com, so don't forget to check it out. Have a great day.